Yo, what is good, everybody? I just want to go through the one trade that I did not take today because I had a little bit of an execution mistake. I just kind of want to talk about this and why I think this is a pretty important thing to understand in your trading, right? But we'll get into it as we go through. So let's just hop into the day bias, all that kind of stuff, right? Um, Zooming out today, bro. It's important to just look at where we are because, dog, this is bad, bro. Like this is really bad price action. And this type of action requires you to trade differently. You need to consider the intraday liquidity much more important. And that has been playing true these last couple weeks, bro. If you try, just look at this search and store profile. Every single time we take one side of intraday liquidity, we usually run to the next side, right? So today, coming in with that, I want to be very careful and make sure that I'm using that to my advantage, right? So coming in, I want to see one side of intraday liquidity get taken that's in line with the bigger time frame potential, and then I want to wait till the lower time frame confirms it, and I'm going to take my trade, right? So slowing down a little bit, what goes on at open here? If we just check out, it was honestly a very simple day. Pretty much everything was over in 10 minutes. But we open and we immediately take London lows, we manipulate, and we go run all the way down to Asia lows, right? So we run all the way lower to Asia lows. And then from there, we take this day low down here. I mean, this was previous day low. We take this, right? And now looking at how this is set up, we place into S&T. What does this now become, right? This becomes a pretty simple buy model, at least up to this high, right? This is kind of a whole entire AMD model right here, accumulation, manipulation, distribution. And it's confluenced heavily by the fact that we have a seek and destroy model here on NQ, right? So Asia, London takes both sides. Now New York takes both sides, right? Really clean with that SMT. Watching how we get a ton of volatility in the open, that's showing me like this is, guys, this is so simple. Candles are big, we're gonna get big moves, right? Very simple stuff. That's how we have to be thinking about the market. And that's one of those things that is so important and so high ROI that a lot of us forget it, right? We think trading is so complex. A lot of us just forget it, bro. So we need to be very adamant about making sure we have volatility in our trades. Today we had no shortage of volatility. After we take this, we have our flip, right? We have S&T put in big rally higher, right? So crazy big rally higher. We end up making a change in the state. Here is where I'm down to take a market order right here. The trade I wanted to take was right here on ES. I saw the structure was a bit cleaner, and then trading to Asia highs and maybe even holding a little bit to bigger time frame equilibrium. That would have been completely fine. The trade RR that I was looking for was right around here, 1.63, stop at this low. Looks pretty sweet, right? This is where I make my execution mistake. I see two things run through my mind, right? This candle forms in about two 15-second candles. Like this was a very fast candle flip and it happened just very aggressive out of nowhere, right? So usually, in my experience, what will happen at a moment like that, right, is that whenever we want to flip like that and do all that and be very fast with it, there's a really good chance that this candle will just run like this right here. Super good chance that we'll just surge and then we'll completely flip in the next candle. So because of that, I'm waiting to see if this fair value gap gets created. If that fair value gap gets created, that's where I'm looking to potentially take an entry, because huge move, I'm expecting the market to probably rebalance, and I want to see that the fair value gap gets created so that there's space showing that this move is not manipulation higher to then go lower, right? It's actually true displacement, which is much more tide finally shifting and then we run kind of thing, right? So I'm waiting to figure that out, and then I place my limit order once this candle gets created, and then boom, we don't get tapped, right? So I missed the trade for the day. What do I think about this? I think that the mistake on my part was this, right? And this is what I'm going to do moving forward. I think that we have to understand, like, any trade, I mean, you can set whatever risk reward ratio you want, but any trade that's like greater than like a 1 or a 1.1, you should be taking it if it's a high conviction setup. A setup that's as convicted as this, I think, is worth taking, even if my RR is a little bit worse, right? So at a moment like this where I'm watching the possibilities, right, I understand that I really like this trade. The whole fact of me getting in or not and making money on this trade hinges on the possibility that maybe we don't get tapped, right? So because of that, I can see that, hey, I want to be sure that I'm in this because I really like the trade. I think it's high conviction. So I'm fine taking a little bit lower of an RR. What I could have done is, instead of waiting to take this trade, I could have just market ordered, kept my stop here for 1.3, or even just moved it up to, wherever I felt comfortable with it and got around to 1.5. That's completely fine. And then even leaving a little bit extra to go to this level up here, like even if you did a 2, bro, like people who just trade fixed Rs, they get bangs all the time just by leaving a little bit extra. This was bigger time frame, equilibrium up here. This ends up playing really sweet. And yeah, so pretty much very simple trade. Watch the ideology here though. Once we take our objective of the day, which is Asia high sitting right here, the second we take that, I'm off the charts, bro. Like I looked at this a little bit later, but I didn't want to take this because these trades always have lower probability win rates, bro. Even if it looks good, sometimes it would deliver, but most of the time it is going to buns you out because dog, you have to understand that trading this is like the breadcrumbs. This right here is what the high probability traders are trading, our high confluence millionaire traders. They're all getting in those first 20, 30, 40 minutes of open. The first hour of open maximum, bro. That is how we have to be trading and treating this trading because this is where all the volatility is here. I'd rather get this done in like 3 minutes rather than waiting however many minutes this whole thing takes. You know what I'm saying? That's the kind of understanding that we want to move into price with, and that's one thing that I'm working on moving into these next couple months and weeks of price action. So once we take this daily objective, I'm off, bro. I don't care whatever happens here. I'm off, and I find that I am more profitable by doing that and literally by working less. Like it sounds crazy, but trust me, bro. So I think that's gonna wrap up the video. Pretty simple day today. Honestly, really nice price action. Just wish I could have got tapped or maybe played this a little bit smarter here. Overall, no problem though. I do really like the setup, do like the trade. And yeah, it's going to be about it. So good to hop on with y'all. Good to see y'all today. And I'll catch you all later. So peace out.